So this is part 2 of this video. So part 1 was, if you watch the part 1, you will see how I made this entry. So the part 2 of this video, we're going to continue as part 2. I don't want the video to be long. I don't want this video to reach 1 hour. I just like maintaining 15 minutes or 30 or 20 minutes maximum for each video. So you see, you can see we have this. This is our first entry. Our first entry was around here. We also have another entry here, but when they took out this trade, they gave us another opportunity to buy. Around here, there was a second entry going. So there was a second entry going all the way to this level, and also here I had, even though I placed 2 entries here, one here and one here. I forgot to mention that. So there are 2 long entries here. Let me go on this. These entries were 2. One was going here, one was going here, just to target the same high. So one was for this, and one was for this. I also had an opportunity to make another entry, but I don't want to go all the way. I just went all the way here to this recent high. It was when they made this pull like this. When they broke this structure, they gave us another opportunity for a buy. I was thinking that once they broke, they'll come down, but they went a little further, hitting this our institutional level. Gave us another opportunity for buys. So what did I target? I target this level. So yeah, I think we lost this one because the market did not reach that level. Getting close to that level, it tumbled. Tumbled massively, and took me out on its loss. This went on a profit, this was on a profit, this went on a massive loss. So when they took me out, I saw something here, so I tried to say, okay, let me see if I can make some sales over here. When I saw this move to the down, I saw, okay, I thought that we were going to call the way here. So I made a sell around here. So it's how this market does things. I made a sell around this region. I made a sell around here. I made a sell around here. Putting my stop loss around this level. So this is like 3 pips stop loss and 10 pips target. So this is what I wanted to do. I wanted to take these shots. Well, I saw something, and I also saw that, okay, we had this order here. So I was like, okay, when we are going to hit you. But look at this breakout structure. Who saw this breakout structure? That is what we call breakout structure. When I saw this, I knew that, oh, these guys have manipulated us. They'll be coming here. So what did they do? They just came here. This is what I was explaining in the first video. If you go and watch the first part 1 of this video, you see where I talked about them taking out these 2 guys. Because they took them out. People that bought here, they took them out, but they couldn't. So I was thinking they're going to take out all the people here. That's why you saw this short position. This short position was right at 916. But what happened? They manipulated us again. They just like doing this thing. Immediately they broke out like this. I took another entry here, targeting where I didn't even want to listen to anybody. Anybody that tells me that they're going to come here, that person is joking. This is where I target. Remember, this is a monthly zone. This line you're seeing here is a monthly line. These are monthly lines. This is a monthly line. This is the previous day's high. So mark these 2 zones. So we are going to come to that first. So I didn't even want to go there because I don't know what will happen there. I don't know if they're going to hit it, but I knew that this one is going to go to this. I knew that this was a manipulation. They went and grabbed liquidity to break out. And this liquidity, you see how grabbing liquidity works. Sometimes you think that grabbing liquidity is one of the best things that can happen in any trading market. Look at how they grabbed this buy liquidity. And look at how they went all the way to this. Just look at that pool. You see, that's why you need to value liquidity grabs. Liquidity grabs, if you can spot liquidity grab, that's when you become profitable. Some people just trade on liquidity grabs. When they see a liquidity grab happen, that's when they place their entries. If they don't see any liquidity grab, they don't place entries. There are strategies like that. And if you can master that strategy, I bet you'll be profitable. No, you'll be profitable, highly profitable. You'll be highly profitable. But the thing is, you're able to spot those moves is not that easy. It doesn't happen most often. Maybe you can spot it in the 1 second or 2 second chart or something like that. People spot those kind of moves well in those charts. So this is a liquidity grab. But for you to see it in the 1 minute is It's not easy. Sometimes you need to see it, but it happens very well in the seconds chart, the 1 second, 2 second, 30 seconds. I think I've seen a lot of people say it happens very well there. A lot of traders saying it happens very well in those charts. So liquidity graphs are very important in the trading. They are very, very important. So I just went here. This is where I went to. I said no. So we have 2 losses already. We've gotten 2 losses. I've gotten 2 losses. So our losses still. So I went like this, and this one went claim to the take profit, but I didn't expect this. London time these days are just going too high. I don't even know what London. This is from here to here is 250 pips. From here to here is 250 pips, and they were able to go 250 pips in a minute. They hit our quantum line 1.3675. So what happened here? When they made this explosive move, I was like, wow, this is too explosive. They tried to sell here, but they made another pull here. So they made another pull here, made another pull hitting here. So I started looking for more entries. I made another entry here. I made a long entry here because I saw this pull. I don't want to miss this move. I thought that, oh, this is the time for us to make a lot of money. I don't know that I'm putting myself in danger. This is 12 pips. This is 4 pips, something like this. So they came here. This is the second entry. This is where I made my first entry. I made my first entry around here. So I tried to follow the market up because I was like, wow, we are highly bullish. We are going to make a lot of money today. That was how I was thinking because I don't want to miss any buy entries. This one was just 1:3. 1:3 or something like that. So I made this market when it was coming down. Let me try and reduce these sizes. So when this market was coming down, this was where this entry was made. This entry was made around here. So when this market was coming down, what happened? They took us out. Immediately, they took us out. Here, it tried to work out, but what happened again? They took me out. Two, two losses again. I don't had multiple losses today. I was just kept having losses upon losses, and this move was they just deceived me. I couldn't believe it. I couldn't believe that they can deceive me in trading. I never believed that they can deceive me in trading. So what did I do? I just said, okay. They used to deceive us very well because losses are part of the game, but they deceived me. It was a very huge deceit. But I just kept moving. I don't give up. I can never give up in trading. So what do I do? I saw this. I saw these guys. And it's okay. These niggas are the people that are causing problems for me. They are the people that said I will not make money, but I will make money. What did I see? I said, okay, I have a fair value gap around here. This pool. This pool. What did I see? I saw this pool. When I saw this move, I knew they are going to come there. So I made another entry here. Recovered these 2 losses immediately. This is why 1:3 is a very. I don't care about losses. This point, I took my entry around here, targeting this level. Because of I even went for 1:5 this time around, and I don't know why. You see, somewhere around there, I was targeting. This was supposed to be 1:6 trade. Supposed to be no, I said 2:6 trade, something like this, 2.1:6 or 2.7. This is the kind of trade I took around here. This is the kind because of this pointers I made my entry more up, and it almost took me out. That's the problem. But I came out as profit. If I went for 1:6, I would have gone for 1:6. But if I went for 1:6, they would just trigger me. But I went to 1:5.9 or something just to avoid being. I like going to this 5.8 because this is my main target. But because I couldn't just go here. I can't just go here. This is where I would have gone to. But because I just need to take out some. This is the fair value gap. This is the main target. That's why I just went for 1:to something like this. 1:to 12.8. And this was it. This was the entry. But if I was in the New York time, I would have taken 2 entries here. Another one going here, and they would have taken me out. But I saw that at the time this was 11 o'clock. New York starts by 12 o'clock, and the time I like taking double entries is after 10. Is after 2 hours at 14 o'clock. I don't like taking double entries around 12 o'clock. I don't know how, but I don't like that's not when explosive moves happen. Moves happen there, but sometimes the most times when explosive move happens around after 14 o'clock, especially after a very huge news. So this is the only entry I took. So when I took this entry, they still made another tumble. I saw another opportunity for to mark a trend line. I marked these two trend lines. So I said this is the first touch of the line. So I came here. Let's go to our text. First touch of the line. We have second touch of the line. This one will give me the words, the third touch of the line. So I knew the third touch of the line is coming. Where is the other block that broke structure? Can anybody identify the other block that broke structure? We are making use of wires and arrows. They created this other block. This is the first one. This is the second one. This is the main one. This is the king of the that broke the structure to the downside. He said no, we are not going to go up. We are not going to reach here. They wanted to go here, and if possible, go to this zone. But this other block said no, you're not going. You're not moving anywhere. So what did he do? He broke structure again. Broke structure to the downside. This low will be taken out. This low will be taken out. So during Asia, what did we observe? During Asia, I was still skeptical for sales. So during Asia, I just decided to take two entries this time because I'm seeing a new structure being built here. So what did I do? I came here. I took a short position. I took two double shots. This was an aggressive move. Now, where's the first one going? The first one is going. I'm seeing a fair value gap here. Fair value gaps are very powerful. Fair value gaps are very powerful. Before I was ignoring them, but I knew that fair value gaps are very powerful. Fair value gaps are very powerful. That's just what you need to know about this video. Go and research more on fair value gaps. Bro, I took before my quantum line, there was a fair value gap. So I just needed to do 1:10. Normal. This is what I do. But this is where I would have taken my exit because this liquidity can actually stop price and reverse this price all the way to the upside. These liquidities are powerful. This liquidity can reverse this price all the way to the upside. But it can also give us opportunities for more entries if this. But that's why I was skeptical whether to make it here or to make it to the fair value gap because I don't want to take more losses. I've taken two losses here already. I've taken two losses here, but I'm taking another loss. So I was a bit very confused, but I just decided to go for this because it was safer for me. It was safer for me. So it's this because of my stop loss. This high is a high swing point. I also took another entry here in case they come to target here. See my stop loss is just my stop loss is not covering this swing point. So there should be another entry going down, maybe coming down to this place in case they come to take out this swing high. But these guys are very aggressive. The buyers are very aggressive. So this was my first entry. My second entry was here. My second entry was here, going all the way to this liquidity. And we closer to this level. 18 pips. Just before the liquidity, I just went here. I would have put it here also. Yeah, this is the best one. But I don't like taking it to wicks. I like taking to body closure. But body closures are safer for me. Wicks, sometimes they don't trigger it. So this was the second one. I also have another one. I had another one. This one was not triggered. This one was covering this. This one was covering this string point. Can you see this string point? Yes, I was covering that string point. So that was what I had. Going now for this low. It was still a good one. But it's still manageable. Let me see. Like, no, it's not this one. I think it's this one. This one. Yeah, this one was going for this low. It's usually so this was my three entry positions. This was very risky because I would have been taken out 3 times. And if I was taken out 3 times there, that would be 1.5% loss for me. Or that would be 3 hour loss. Because I reached 0.5% per trade. So I would have had 3 hour loss here, but I was lucky enough to have what? I was lucky enough to have because it worked out well. So I made what? R. That was my luck. I would have made 3 losses there when I had 6 R. And what did you see here? Do you see something? When they reach this you see what happened here when they reach this quantum level 365. That's like creating a consolidation pattern. Let's leave our entries out first. Let's leave our entries out so that we can see what the price action is talking about. So if you come here, you will see something here. Is there forming this? this is a consolidation pattern. They're trying to. But when I saw this, I was like, this guy is trying to. They've taken me out there, they've not taken out this level. I was thinking like they want to reverse the whole price to the upside. But this consolidation is something else. But I noticed, I saw something. I saw opportunity for more sales. This is what X A B C. At C, the market always tumbles. I've seen this thing happen many times. If you see a consolidation pattern, and this is the O. So this is the O. The origin is the O. X A B C. Study this, very important. Now, if you look at this O, what happened in this O? There was a retracement here. Let's go here. Fibonacci retracement. You see, this is the origin. Where the origin starts, that's where you mark our O. So we mark it the X. You see the retracement? What are we seeing at the retracement? They retrace to the 0.618 level. That's where they retrace. The A retracement is more important. You can also leave this, but this A retracement is the most important retracement here. You can also use this, but it doesn't matter. But when you see this retracement with A or O, or this one, any of these two here, this one was giving us issues. But when you see a retracement to the 0.5 or 0.68 level with the Fibonacci, just know that this should be the next target. So you can take an entry. Many people, when they see this plan of formation, when they see this C forming, they already taking sales. They don't want to see any confirmation. Maybe they look for one other block, something like that, and they are taking their sales because the other block is aligning with this trend line here. So they just take their sales, targeting this 0.68 level, 0.27 level, and 0.612 level, and it worked out perfectly here. I'll show you many instances where this thing works out. I'll show you multiple instances. If you keep watching, I'll show you an instance in gold. I'll show you an instance in Bitcoin. I'll show you an instance in Bitcoin where this thing happened in one of my future videos. I'm going to show you XABC pattern. I call it OXABC. Most of the sales takers, sometimes they start to go to CDE. At E, they will start looking. So, but it normally ends at E. It doesn't go beyond E most of the time. But most time it ends at C. Many times it ends at C. So what did we observe here? We observed that they broke structure. So we came out at profit after our three entries, which is very nice. It is a nice thing that we have three entries there. So we broke out and we took out these lows. Remember, I told you about this trend line from the 1 hour. I told you about this trend line from. See, we are reducing all these levels. These levels are just high level, but oh no, New York just decided to reverse the price. They don't even like what they do. Look at where is that other block? This other block wasn't even formed during New York, but when New York opened at 12 o'clock, which is at 7 a.m. EST, what did they do? They decided to follow the path. They just decided to reverse the price. This guy gave this end of this one. So I don't know. New York not like high prices of GBP. They just wanted to short GBP today. So what happened here is that it broke below this trend line. And can you see another break? We are just making previous breaks. You are not going to target this low. There's another that is this a strong low? I don't know. This looks like a strong low. This looks like a strong low. Let me go to the because I'm not seeing all of things here. There's something going on here. We have this low that broke structure. We have this low that's a kind of broke structure. So this low, this guy is just part of this. So that's why you saw this target. Are you seeing something here? There's something you have to observe here. These two lows are just the two better lows because it's only when they take out this low they will come for this low. You understand? I don't think they took out. Did they take out this low? They didn't take out. They just swiped it. The liquidity, but it's just a liquidity, but it still can still look like they took it out. So these two lows are connected. So when they took out this low, that was why they started going for this low. So we knew that this is the next target. Maybe they broke below this low. This was a very huge break below this low. So I took another entry right at 14 o'clock. 14 o'clock, I took two more entries because I can't miss this move. I took this move to this low. When I saw this, they took out this low. I knew that these two guys are part of. But if you look at this low, even though I knew that this low was the low that broke this general structure, but this low also had another function it was doing. It broke out a lot of structures to this upside here. Came here, didn't take out this low. It made this other new low. I would have drawn a special trend line for it. Taking out this high. You understand? So it had a special purpose. it has its own purpose, which is let me even draw the trend line for that one. So the trend lines. You can see a trend line within another trend line. That's one thing I have to say about this market. There's always trend line within another trend line. See that? That's what I was expecting. Let me mark it a different color so it doesn't conflict with the main color. That was the trend line I was talking about. As that trend line has a special purpose in life. Let me mark it something like this. It has a special purpose in life. First touch of the line, second touch of the line, third touch the broke structure. So when I saw this, that's why I need to go to the 1 minute. This market was volatile here. When we see a volatile market like this, you might not be able to take interest. This was highly volatile. Market was highly volatile at this period. So I have to go to 1 minute to see if we can get interest. We have to go to 1 minute to see if we can get entries. So what happened? We are seeing how they are breaking this line. I knew they are going to target this. This liquidity was my main focus there. I don't like. Let me just put the liquidity there, so you can see that this liquidity is going to be haunted. This liquidity was going to be haunted because this liquidity did not serve its purpose. Its purpose was when we hit here, first touch of the line, second touch of the line, third touch of the line is supposed to go to the that's how you're supposed to break this level and go to this zones. You understand? A lot of people were watching this trend line. So what happened was instead we just in these breakdowns. Whenever I started seeing a structural breakdown like this, I don't know why we broke it. I was thinking, okay, maybe they're going to cover up. See, we had a bullish mood we have here. We are thinking that okay, yes, they're about to this is going to happen. So I was thinking that if they take out this level, if they take out this level, if they take out this level or take out this level, I'll start looking for buys because this trend line is about to we're about to go to higher levels here. This is 14 o'clock. So what happened was instead of going there, what did they have? What did they do? They broke this. They broke this floor again. I now knew that something huge is about to happen. They're going to abuse this place as resistance. What did I do? I took my entries here. I started taking entries. I started taking short entries. I started taking short entries because I don't want to miss this move. I started taking short entries. So what was my first move here? This one. This one was the one I took. I took this one going for this same low. That's 3 pips stop loss and what? 3 pips stop loss and this target. This was where my entry was based from this level to this level. I also took more entries covering this area because I might try to hunt this, but I tried to hunt it, but I don't left it there. And I took double entries because this is 14 o'clock. 14 o'clock is the time I just like taking it up because this is where there's a lot of money. The US have a lot of money. They're the richest in the whole world. Where was my second entry going all the way to? I didn't go here. Unfortunately, I did not go there. I would have gone there. I had the opportunity to go there. But I saw this guy here. This my institutional level. So institutional level guides me on take profits and normally guides me on take profits. So I just decided to just take like okay, let me say 20. Just the first one is to trade covering this size, so like something like this. Just took something like this. This was how my trade ended today. So thank you for watching. Thank you for your time and have a good day.